Hey, if you're an option or stock trader, then you know looking at the stock charts is paramount to being able to have profitable trades. If you're not looking at the stock charts, then how do you know which way a stock is moving? All right. So, and if you're trading options and you're not looking at stock charts, then you better not be trading options because you have no idea which way the stock is going. So in this video, we will run down the charts and we will look at certain stocks and see which way they're moving and which way they might be going in the future. So you have to have an idea of which way the stock is going to move or not move if you're either trading stocks or options, especially if you're trading options. I tell my students that if you want to trade options, you got to look at the stock charts. So if you want to see what I'm seeing, and this is the way that I do it, I always look at the stock charts before I get it into or out of any option trade. So if you want to see what I'm seeing on the charts, you want to stick around and watch this video. I got my Krispy Kreme hat on, so let's go. All right, everyone, Lee Lowell here from smartoptionseller.com. Once again, we're looking at the charts today. I usually make option strategy videos, but I also want to make these chart watching videos as well to show you what I'm seeing on my charts and why it helps me get into and get out of option trades specifically. So we just look at the charts and that's what we do. So let's just jump right in and see what's happening. Look at certain charts. What we always do is we always look at the broad market first, which is the S&P 500 in my opinion. And we look at and we use the SPY, which is the exchange traded fund for the S&P 500, gives us the best overall view of the market as a whole. What you see in front of you is the chart that I look at. Got about a 2-year look back period, and that's just based on the size of my screen here and the size of my monitor. And so it gives me about a 2-year look back. You don't have to, you can use any time frame you want, but I always look at a daily bar chart, an open, high, low, closed bar. Each one of these lines here is 1 day's worth of trading. I only have 3 moving averages on my charts. I have a 20-day, 50-day, 200-day moving averages, all simple. You got the 20-day here, 50-day here, 200-day moving here, and down here is the only other indicator that I use, which is the RSI indicator. It's a 14-day look back period. It is an overbought, oversold type of oscillator. I use the 80 level and the 20 level as my parameters. That helps me know whether a stock and or index is getting either overbought or oversold. Doesn't mean a turn's going to happen right there. Just let me know that stocks may be getting a little frothy on the upside or very oversold on the downside. So a turn could be coming in either direction when we hit those extremes. And then other than that, we just use price patterns. We use support and resistance levels. We use channels. Channels are a big thing for us. So if you want to understand what's happening with a stock and or ETF / index, you have to see which way a stock is trending first, okay? And the best way to understand which way a stock is trending is by looking at the chart and drawing some channels, okay? So let's just use the SPY here as our example. So we know in 2022, we had a huge down move in the market. Right at the beginning of 2022, the market just went down. You can see how the market has ups and downs, but in this general trend, you want to know what the trend is of a stock. Why would you get into a trade of a stock if you don't know what the trend is? You can't just trade stocks or trade options, say, I'm going to buy, call options or buy put options on this stock because, someone just told me to do that. Well, how do you know if that's a good idea or not if you don't look at the stock chart and see which way it's trending? Obviously, the market as a whole and a lot of stocks as well were all trending lower in 2022. So if you were bullish, it wouldn't make sense to take bullish trades until you saw a turn in the market. Yes, you have to wait for some timing here for the market to turn. Now we saw around October 2022, the market started to turn and has been moving higher since, okay? So the best way to do it, to see which way a stock is trending, is to put in trend lines like this. These are manual lines that you can draw yourself just to see which way a stock was moving. So what you can do is you take your trend lines and you connect most of the tops along the way and you connect the bottoms along the ways too. You try to, it's not exact. You just want to give yourself a general idea which way the market's moving, okay? So obviously, we're drawing the lines after the fact here, but as it's happening, you can also draw lines on smaller chunks of the move. Okay, now here obviously we can see the SPY has been moving upwards. We're going to draw some new lines here. You try to connect some of the bottoms, okay? Doesn't have to be exact, and you connect some of the tops here. So obviously you can see the S&P 500 is in an uptrend, and it's bouncing along inside the channel. So the channel is a great way to see which way a stock is trending. Now, if you're ready to make a trade, depending on which way the stock is trending, since the market is in a bullish trend now, what we want to do is get on the bullish side of trades. So while it's in a channel here, the best course of action is to wait for it to come back down to some support area within the channel. That could either be the 20-day moving average right here, which it has connected with and has fallen under a little bit. So your next line of support would be the bottom edge of the channel here, which also connects to the 50-day moving average. So it looks like the SPY may end up falling a little bit more, at least that's the current momentum, down to the bottom edge of the channel, which will connect with the 50-day moving average. That is, you got two areas of support right there, which looks like it's probably going to be in the low 440s, maybe 442 or so. If it connects down the end towards, the middle of this week, we'll see what happens. But the low 440s could be the area where the SPY S&P 500 finds support. And then what you want to do is wait to see if it starts to bounce. If it starts to bounce from there, then that's your higher probability timing entry point where you can get in on a bullish trade if you start to see it bounce and start to move higher from there. Okay, now if it goes down through the support of the bottom edge of the channel and the 50-day moving average, then we've got stronger selling coming in. And then you have the 200-day moving average down here lurking below. But you can also use the RSI. If it starts to sell off, you can wait to see if it starts to get into the low 20s range for that oversold area. So our course of action right now is just to wait to see how the market opens on Monday and see what happens Monday, Tuesday, Wednesday. We want to see if it connects with the bottom edge here with the 50-day moving average and then curls up and starts to move higher. If it does, then we know that's your timing, your higher probability timing pattern to get into bullish trades. All right, let's take a look at the triple Qs, which focuses on the Nasdaq, the exchange traded fund for the Nasdaq. Same thing. We have the channel here, so we know the market is in an uptrend. It's better to trade with the trend than to trade against the trend. Okay, if you were to get bearish here, if you were thinking that you wanted to keep going along with the down move of 2022 and you tried to keep picking tops here, the market would keep moving up on you and you would have a hard time making money unless you're scalping intraday and you're just making money on each day's move. That's a hard thing to do as well. It takes a lot of time and energy. But if you're a longer term trader, you want to stick with the trend. It's okay to, most people will think, oh, I don't want to buy up here. It's just gonna go down on me, which it did. But as you can see over time, it starts to move up. You think this is the top here? Nope, it keeps going up. You think this is the top here? It keeps going up. So don't be afraid to buy what you may think is a top, because if it's in an uptrend, it's going to keep going. So if you thought all these points were the tops, you're going to be left in the dust because you're thinking the market's going to sell off, and it just keeps going higher. A trend in motion will stay in that same direction until something moves it in the opposite direction. So it's better to play with the trend than to play against the trend. Okay, so the triple Q, same thing. Hit the top edge of the channel. It's fallen below the 20-day moving average here. So the next line in the sand of support will be the 50-day moving average. So for your timing patterns, you want to wait to see how it reacts to the 50-day moving average. Watch the RSI as well. See if it gets down into some oversold areas. If it gets through the 50-day right here, then you've got the lower edge of the channel waiting to give it the next line of support. If it does and it starts to curl and bounce up again, then this is the area where it's going to bounce and keep moving higher. What is happening out in the market these days as far as news goes? In the U.S., the U.S. credit rating was downgraded this past week by Fitch Credit Agency, took it down a notch. Does that really affect the U.S., especially the U.S. stock market? I don't think so, because the companies within the stock market are going to keep making their products. They're going to keep earning profits, and the stock prices of those companies are going to keep going up. I don't think the stock market really has much of an effect from a downgrade like that. Yes, it's big, centralized, sensationalized news, which, you get the knee-jerk reaction to the downside, which is part of the reason why the market sold off this week. So, but when calmer heads prevail, you realize, you know what, it's not such a big deal. The stock market should keep going up. So we have to take advantage of the trend, which is upwards right now. So we wait for the higher probability timing patterns, which is, connecting with the moving average or connecting with support of the channel. All right, so we can look at the diamonds, the DIA, which is the exchange traded fund for the Dow. So here's the symbol right here, DIA. I'll move myself over here a little bit. We've got a lot of lines here. So what we saw, and these are patterns that I've kept on the charts for a period of time here. We had, these big up and down moves. We had the resistance, this line here, for a long period of time. We had the ascending triangle right here, which is when the market starts to move up and has the flat top that it can't get through. And then finally, all that pressure pushes it through. So the Dow finally got through the resistance here, moved up, and now you see it's sitting right on the 20-day moving average. Hopefully, you're going to find some support there and move along with the rest of the market. All right, let's take a look at some individual stocks and see what's happening. Now, let me move myself back here. So we want to look at the more popular biggie stocks because, those are the ones that people concentrate on. We're going to look at Apple first because Apple had earnings that came out on Thursday after the bell, and so did Amazon. We'll look at that as well. So with Apple, we had this huge W pattern, which is typically a very bullish pattern, but it played out over a very long period of time, had the resistance here right around the 180 level for a very long period of time. And this also could be seen as a triple top. Triple tops are bearish. So I had said for many months that there was going to be a battle between the bulls and the bears right around that 180 level. And finally, back in the middle of May or so, or beginning of June, it looks like it finally broke out to the upside. 180 was moving nicely along the 20-day moving average. You can see how the 20-day moving average was holding the support all the way up until earnings came out after the bell this past Thursday and knocked it back down. Apple fell over $9 a share. So for all of you bulls out there for Apple, or those who want to possibly get long shares of Apple, you want to wait to see how it's going to connect with this 180 level, because that was the prior area of resistance, now becomes an area of support. Okay, so 180, you want to keep an eye on that level this week. If it drops down to 180, you could possibly nibble on some shares being long to see if it's going to bounce there. Don't go all in, because if Apple falls through 180, it could fall a little bit further. So I'm keeping an eye on Apple for potential bullish trades for our newsletters. I want to see what's going to happen this week, see if it holds at 180. If it holds at 180 and starts to turn higher, then there's enough support out there, enough people that want to get long on Apple. So keep an eye on Apple. Let's look at Amazon. Excuse me. Amazon, obviously, we have a lot of lines on this chart. We had the uptrending channel here. Amazon earnings came out. They blew it out of the water, and the stock was up pretty good on Friday this week. So Amazon, you know what? I'm gonna take a lot of these lines off of here because it just kind of, making the chart look pretty messy. I'll get rid of these old channels here. All right, so we got more of a cleaner looking chart here. So you can see Amazon was in this nice uptrend, had found support right on the 50-day moving average just before earnings came out, and now it's got this island sitting up here. An island is when you have a gap move, whether higher or lower, and it's just you have all this air pockets in here. So this is, a lot of people would like to see the stock fill the gap, meaning it needs to come back down and close the open areas here. Sometimes it happens, sometimes it doesn't. Since Amazon had really good earnings, it may just start its new trend from here and never come back down and fill the gap. So Amazon looking strong, looking pretty good. Let's look at Tesla, another favorite of so many people. We trade Tesla in our newsletters as well, our spreads newsletter. So we take limited risk trades here. Now Tesla, I've always said, is just all over the chart. It's a very volatile stock, but there's so many people that love Tesla that will always give it support, underlying support, because there's so many bulls on Tesla. But obviously you can see towards the end of 2021 and on a lot of 2022, all of 2022, Tesla was in a downtrend until just this past summer, this June, basically, it broke out of the downtrending channel, which is pretty big move. So now it's in this, it was gotten itself into this uptrending channel and now doing a little sideways dance here. So let's get rid of some of the lines here so we can see things a little bit clearer. There's a lot of channels here. We had bull flag in here. And so we'll remove some of these items. This is just part of the process, a lot of manual labor drawing these lines. So now you can see the one other line I want to draw here is you got some support, right around the 250 level or so. So we'll keep a line here and see if Tesla finds some support this week. Probably high 240s, low 250s right here. Want to see, and you can obviously see it's connecting right on the 50-day moving average. These moving averages, the 20-day, 50-day, 200-day, are used by millions and millions of people. So we're all going to be seeing the same things, and we're all going to be taking the same kind of moves. Obviously, look at this. Right on the 50-day moving average, you can see that's where it landed for 3 days in a row. So the 50-day moving average is giving some support, and you have this other line right here around high 240s, low 250s as another area of support. So if you see Tesla bounce from here and start to move higher this week, the next leg higher is probably going to keep going. So keep an eye on Tesla this week. Let's look at Adobe. These are the big Nasdaq stocks. These are the stocks that have an outsized effect on the index themselves. Adobe and Nvidia, which we'll look at next, have just been monster stocks this year. I like Adobe here. Been catching support on the 20-day moving average. You can see it goes up and now it comes back down. If you're looking at let me make sure everyone knows what stock here, Adobe, ADBE, Adobe. When you're looking to get bullish on a stock or even bearish, you want to see how it reacts to the moving average lines, okay? So it's getting support right on the 20 days. So if you're looking to be bullish here on Adobe, you could wait to see if it bounces and then starts the next leg higher. That's your higher probability timing pattern to get long on the trade. And obviously the 200-day, 50-day, 20-day, they're all sloping upwards. Sloping upwards tells you that the stock is in an uptrend. So buying on pullbacks, not up here, not on the breakouts. You want to wait for somewhat of a pullback for your next chance to get in. Okay, so it's not overbought or anything. So if Adobe starts to turn higher, that's your next high probability timing pattern to get long on Adobe. Okay, so let's look at some stocks and downtrends. We've talked about Verizon. I always mention Verizon because Verizon is the top mobile phone carrier, at least here in the US. You would think they'd have some more dominance in the market and the stock would be moving higher, but the stock chart's just been, let me move myself here a little bit. The stock's just been moving down, down, down. It's not giving us an opportunity to get long the stock. For any of you who've been bearish, it's great trades on Verizon because it's just been moving down and you've been following along. You can see the moving averages are sloping downwards. That means the trend is still moving down. Trying to pick bottoms and get long a stock that's in a long-term downtrend will not work for you in the long run. You think that here's the bottom. Nope. Here's the bottom. Nope. It keeps going down. Here's the bottom. Nope. Picking bottoms is a really hard thing to do. You want to, the reason why people do is because they want to brag to their friends that I was able to buy the bottom on this stock, but you're going to get burned too many times. The trend is down. Stay with the trend. This is a bearish type of stock right now, okay? I'm waiting for it to get bullish where I can see it moving upwards in a channel. It's just not there yet, so I'm staying out of Verizon. Same thing with AT&T, okay? Symbol T, AT&T, the other major phone carrier in the US, just in this nasty, ugly looking downward channel here, just the whole chart's down. I would not be getting long AT&T at all because it's just not showing me. Why would I want to get long? The chart's not showing me that. So use the chart. Make sure you go with the trend. Don't make trades without looking at the charts. Let's look at Costco here, another great company. So here was the congestion pattern where the stock gets tighter and tighter and tighter, building up energy to blast out one direction or the other. It was the upwards direction. Once again, you can see how these moving averages just act like magnets. Close right on the 20-day moving average. Costco is in an uptrend right now, okay? Here's, you draw your nice little channel, okay? It's a thin little up channel right here. And right now, it's coming back down to support. We've got the 20-day moving average and the bottom edge of the uptrending channel. If you wanted to be long Costco, this would be your higher probability timing pattern that we talk about. Costco, COST is the symbol. If Costco starts to turn higher from here, then you know you've got your next leg of the potential bull move happening. That is your higher probability entry. All right, so you want to look for these kinds of patterns and channels to set up. Let's see what else. McDonald's, let's quickly go through here. Pepsi, another chart we talked about. Just a nice moving uptrend over time. Pepsi's a great dividend paying stock. You can see how it bounces within the channel. Now it's just kind of sideways here, kind of getting caught between the 50-day and 20-day moving averages, but still in that nice upwards movement right in the middle of the RSI. So it's not overbought, not oversold, just kind of moving sideways, but slowly continues in that upward trajectory. Coca-Cola, same thing, another great dividend paying company, but it's moving sideways. There's, not much action here. A lot of people own Coca-Cola for the dividends. Not much happening here. I wouldn't get long or short Coca-Cola right here. Let's take another quick look, see if there's anything here. Meta/Facebook, just been powering higher since October, November. It was about $90 a share. Now it's hitting $310. That was a great move for anyone long Meta. Look how the 20-day moving average just acted as support the whole way up. Unbelievable move there on Meta. So congrats to those who've been bullish on that stock. We have not played Meta. IBM, looking pretty good in a nice uptrend. Let's take a quick look at Google. Google also moving higher, kind of, was in this channel, blasted above the channel. This kind of looks a little ugly. Let's remove some of these. Not every chart is going to have a nice, clean pattern to look at. But as long as you can see that the stock is moving upwards, it's in an upwards trending pattern. We can draw new lines here. It's just in the eye of the beholder. There's no black or white here. Just you want to get a general vision of what the trend is. So Google's in this sort of in the middle here, and but it is in an uptrend. Let's see what else before we call it. Some of the healthcare stocks. We'll look at Johnson & Johnson. Some of the healthcare stocks are on the move down right now. This is Glaxo, GSK. Pfizer's been moving down. Just kind of keeps going lower. Bristol Myers moving down. These are stocks in a downtrend. You don't want to get long here until it starts to move higher for a period of time. If you want to get short, that would be a higher probability trade on a stock like Bristol Myers. The trend is down. Go along with the trend. All right, so that's really the lesson here today. Those are some of the stocks we're looking at. Let me just see. Oh, I want to show you one other stock here. Oh, I didn't look at NVIDIA. Let's look at NVIDIA, then we'll look at Carvana, and then we'll call it a day here. So NVIDIA also just a monster of a stock. Monster. Just has blown away all the uptrending channels here. Just the gap up here, as I said, sometimes stocks don't come back and fill the gaps. This is NVIDIA. Here's the symbol up here in the top left. Just now it's forming a whole brand new uptrending channel. Okay, so it's just, who knows if it will ever come back down and refill this gap down here. Oopsie, let's get that up there. Here's the gap down here. Who knows if it'll ever fill, but NVIDIA, just a monster stock. All right, last stock we're going to look at is Carvana. Carvana is one of the most shorted stocks out there. I'm going to show you a quick website where you can get some of this information. Carvana. There's so many people that are short this stock, want it to go down, that if there's any kind of massive push to the upside, you're going to get all these short sellers that are going to have to cover their short sales, and it's just going to move this thing parabolic. We've been trying to sell some put options, way out of the money put options on Carvana. I've done a couple for myself in our newsletter. We've been trying to sell some, just couldn't get it done yet. It's been a real stubborn stock, but these put options are paying out pretty decent amounts of money on the downside. If you're okay with potentially buying Carvana down at very low levels, may want to look at selling some of those put options that we've been doing as well. But I want to bring up the website here to show you. Let me bring this up. We're going to go back to this chart, this page in a second. Here is it's called highshortinterest.com. You can see where my mouse is right here. highshortinterest.com. Great website to see the most heavily shorted stocks. You can see Carvana is #1 on the list, the most shorted stock out there. It's got 47% short interest of the float, which is the outstanding shares that the public can trade in, not the full outstanding shares here. That's because there's some shares that are held by private individuals that are not included in the public. The float is how many shares are out there for the public consumption, and 47% of that float is shorted stocks. And any type of bullish action is going to have a lot of people getting panicky, and they're going to start buying, and it's all that buying demand is going to send the stock skyrocketing. So we're trying to play Carvana as a bullish move. All right, so let's quickly go to our website, smartoptionseller.com. What do? We sell options, mostly put options. That's our main gig. We sell put options. We sell put option credit spreads. If you know nothing about selling put options, go to our website, click here, Put Selling Basics. That's the name of the ebook, Put Selling Basics, free book. Learn about put selling, why we love it so much. Scroll down, put your name and email address here. We'll send you an email with a link to download the book. You only have to fill this out once. We've got this box all over our website. You don't need to fill it out more than once because it won't work. So that's our free ebook. Here's our services tab. We have 2 newsletters all about selling puts and put option credit spreads. We have our one-on-one coaching sessions. Got lots of students coming to us for help to get them to that next level. We have our calculator purchase. We have on the shop tab, we have a Warren Buffett ebook that I wrote. So there you go. So on the screen here, I'm going to put up a couple other videos, some other things that you may want to watch. We want to get these videos to go viral. So if this video has been helpful, please give me a thumbs up. Leave me a comment. Watch these videos. Tell me what you're thinking. Send me an email. Don't forget to subscribe. Hit that red subscribe button in the bottom right-hand corner of the video. And down in the description of this video, I've got lots of links in there, some things that may help you with your own option trading. There's a couple books in there, some easy technical analysis books that could help you figure out how to, start to read charts, what patterns to look at. So look in the description below. I got some links for things that might interest you. All right, that's all for me today. I hope everyone has a great weekend and a great trading week ahead. Hope to see everyone here next weekend as I do my next video. All right, this is Lee Lowell signing off.